All right, it says we're going. It's our last chance. But anyhow, it says that we're sharing the screen, so that's good. But anyhow, so we're recording this because Mickey has a question about a longer term play going into earnings for Square. All right, so Square, Square's earnings on the 6th after. Okay, so we're going to be looking at two things. I think probably the simplest and quickest is one of two plays. One is to do a calendar and one is to do a straight vertical. So first let's figure out where it makes sense to target, right? Okay, so Square is trading 65.29. And for the date, we want to use the 6th because that's the vol that we really need to use for our target. It's more conservative. The vol for, excuse me, not the 6th, the 8th. And the 6th. Okay, so keep typing the 5th. Okay, the vol for that 8th, which is a week from tomorrow, is 94.59. Okay, so we should be targeting, I mean, you're targeting 72. You could probably target a little bit even higher than that if you wanted. Be a little bit less expensive. If you want to target 72, they might not have higher than 72. No, they do. So either if you want to do 72, let's go with that. Okay, so we have regular May versus May 8th. Okay, so we have that down. So now we want to figure out for the calendar, we need to look at a risk graph. So for this, we want to sell the 70. We want to go to the 15th. 72s, we want to buy. This is saying we can only do the 72 halves. Careful, that's a live trading platform, Mike. All right, so the 72 halves, which makes enough sense, right? And then we want to go out to May 8th and do the 72 halves. Hopefully they list those. All right, well, I don't know why they didn't list. Let me check again. But for regular May right now, you can only do the 72 halves. So you would have 50 cents of potential risk, which makes me think that you probably want to be looking at a vertical. And then if you said that you might want to take it, right, 72 halves. So let's just look at its, clear this out. Let's look at how about like a 69.72 half, all vertical. That's going to be trading $1.06. Right, so if it's trading $1.06 right here, we got the 69.72 half. You know that's going to max itself out at 72 half or higher. And we have to pay, let's just say that $1.06. So, and then we got to put our positions in here. We're buying one, selling our target strike. We can make 350 on our spread if somebody were kind enough to sell this to us for 0, right? Nobody's going to do that. We already said that we're going to have to pay $1.06 for it. So you make 350 on your spread. We have to pay the $1.06. That's a net of $2.44, 2.3 to 1. It's not great. Not enough risk. I agree. Now we could tighten that risk up by doing the 70-72 half. That spread is trading. I gotta be careful because this is a. $70.72 half, and that is trading, should be trading, I was going to say, it's trading 68 cents. I thought it would be trading 75. It's trading 68 cents. So let's just say we have to pay 70 to get into that. And this is now 70.72 half. Now we're getting 2.57 to 1. Not great, but it's within the parameters. And like we said, you didn't have to take it through earnings. So that would be, I would say that the calendar, just the strikes don't line up, because I don't know that you want to be long something that is further out of the money than you're short, because you could end up getting hurt. And you'll be long Las Vegas. Just there's more moving pieces, in my opinion, than I would like. So this is viable. It's not like, oh, we're going to knock it out of the park. But remember also, targeting the 72 half, going back to here, we really could be targeting 73 or 73 almost half, 74 almost half. Then you're going to get more risk to reward. Yeah, on the calendar, because you're long the 72 halves in the back month and you're short the 72s. And so that means that if you go up, you're going to have 50 cents of kind of naked risk. And you're going to have to predict what implied vol is going to do and everything. I just think it's cleaner to do a vertical. And if you wanted to target higher than 72 half, that's viable too. Well, the 59% confidence interval is targeting 738, and the full standard deviation is 74.43, only going up to the eighth. But we're looking at a 15th spread. So your risk reward is going to be probably a little bit better. Right, exactly. That would be a diagonal, and a backwards diagonal at that. Usually when you do a diagonal, you have a higher strike because usually an implied vol is so much higher in that front month or week that you're able to buy a strike that is lower in the back month or week and sell a higher one and actually get that cushion that we're giving up on this one. No, because the 72 halves aren't listed in the front. That's the problem. That's why I said there's a lot of moving parts where you could end up being right and screwing yourself. That's why I said we should go with the vertical, if anything. And like I said, you can target a little bit higher, which is going to cost you a little bit less, and thus have a better risk reward. Was there a different strike that made? I mean, I think in the back here, it's back, so we don't have all these strikes. So the next one is 75, which I don't, that's in the 8th. If we take it out here, so that takes the calendar out of play, still the same. 72 half, 75. I think you're asking too much to target 75. So I think if I did anything, I would do the 70, 72 half vertical spread for regular May 15th. All right. Anybody have any questions on that? I know we don't really talk about that much in this room, but that doesn't mean we can't. I'm just not going to put out a calendar spread out there. You're very welcome, Mickey. All right. Let me see if I can render this video. Everybody, like I said, this is not a signal. I don't want anybody to say, well, Mike said to do this calendar. Just having a conversation. Did we just get stopped out in Apple? No. No, we're good. We're goodish. Okay. Let me see if I can do this. This is the first time I'm using Loom on this machine. You got it. Guys, keep asking questions. All right, I'm going to mute so I can render this thing.